Thank you very much to Tim. That was a very interesting talk. Next up, we have Mark Smith. Mark is the CEO and founder of Symbiont. With over 2 decades of global experience in fintech, Mark is a pioneer in creating and deploying disruptive technology to the foreign exchange ecosystem for both institutional and non-institutional customer segments. Mark founded 4 fintech companies that he took from startup to exit, including the Next Trade ECN, Matchbook FX, Lava Trading, and Andoran Bank of Tampa Bay. Please join me in welcoming Mark.
That's okay. No worries.
Okay. I think you're in here.
No, I give him a jump.
Oh, okay. Yep. Do you see it?
Yeah.
Perfect.
Okay. Got it? Perfect. Thank you very much. Tim, you got me pumped up, man, I tell you. I'm glad you went after lunch because everybody stayed awake. And now if I wasn't in this industry, I'd be calling you at R3 and saying, how do I get involved? That was captivating. And I'm proud to say that our little Symbiont is one of those companies that was in the lab with Tim, and we spent an exhaustive amount of time working in a syndicated loan pilot. And I share his sentiment that it's time to produce. And so this conference is the business of blockchain. So hopefully we can talk a little bit about business. I'm going to go as fast as I possibly can so we can have questions. I want to make sure that I have the right numbering here because I don't remember the... Oh, okay. Okay. All right. Fair enough. Use all my time? Tyler. Wow. Yes. Perfect. What do we got? What are we together doing? You don't know? All right. So I guess the first question is, who is Symbiont? Because I'm following in the footsteps of giants, IBM, Microsoft, the next big giant, R3, Ethereum, the CME. And so who's this little Symbiont startup company, and what are we all about? So Symbiont is a novel, purpose-built, decentralized, smart instrument platform, specifically designed for financial markets. So you'll notice a couple weird things about what I say. First of all, where's blockchain? It's not there. Where's DLT? We've just recently moved that out of our lexicon. And where's smart contracts? We talk about them as smart instruments, and we previously talked about them as smart securities. So we continue to push the boundaries of what this technology is and what it's supposed to do and how Symbiont is embracing it. So one of the things that has happened over the past 4 years since I've been in this ecosystem, when we founded the company back in 2013, is there's been an evolution. Started off with Bitcoin, which you've heard about. When everybody was talking about Bitcoin, we were talking about blockchain. Then blockchain became a hype, and we realized blockchain wasn't going to work for financial institutions, and so we moved on to distributed ledger technology. People talked about tokenization, and we realized that the true value proposition is in workflow and automation, so we started talking about smart contracts. Then we realized, oh, this term smart contracts, well, that's potentially troublesome. I think as Tim said, some people say they're neither smart nor contracts, and R3 focuses them on as contracts. At Symbiont, we actually avoid the term contract altogether. Our definition of a smart instrument or a smart contract is an event-driven program with state which runs on a decentralized, distributed, replicated shared ledger and which can take custody over and instruct transfer of assets on that ledger. So that was Symbiont's standing definition. It is now the first smart contract legal definition in Arizona House Bill 2417. They defined what a smart contract is. And it is, in fact, our definition. So we're very proud of that. And you'll notice it doesn't mention contract in there at all. Why? Because there was an attempt to be descriptive, not prescriptive. And it was an attempt to avoid the concept of enforcement. Because once you use the term contract, the next question is legal enforceability. But when you talk about event-driven programs, no one asks you, well, is that enforceable? Well, of course it's enforceable. It's a program, and it's going to operate deterministically. So there are different ways to approach these concepts. Our focus is on creating instruments that utilize this technology. In fact, that is our true value proposition. So what you see up there is on the left or on your right, smart contract code. Smart contract code, when it's applied to a decentralized ledger, results in what we call a smart instrument, and it provides for simplicity and cost savings, and risk reduction. And what you've heard a lot today are about technologies, but not what you've heard the feature, but not the benefit. And when you talk about business, you want to talk about the benefit. So to quickly describe what we've been doing at Symbiont since launch, we started off building our novel platform. We don't use any open source technology. We felt that it was important to build enterprise-grade solution from the beginning. And therefore, we've avoided going down the rabbit hole of open source. There are fantastic applications for open source, but when you're dealing with the financial technology marketplace, it's very difficult to rely upon open source technology. So we've built and released our first application of assembly back in October of 2016, and we've since continued that with the launch of our syndicated loans product through our joint venture Synapse, as well as built out our exclusive relationship with the state of Delaware. We're the only company in this ecosystem that has a public-private relationship. We chose to partner with the state of Delaware because most of you may be aware that that is where the world goes to incorporate. Over 80% of all companies are incorporated through the state of Delaware. 90% of all corporate law is adjudicated in the Court of Chancery in the state of Delaware. So if you're going to go find a place to recruit and partner with regulators of a certain domain, the state of Delaware was an excellent opportunity, and Symbiont grabbed that opportunity. And what we've done since then is go live with transferring their public archives and record storage structure from an old rickety access database into a new distributed decentralized ledger solution that includes the use of smart instruments to automate the management of government records. So government records typically have retention schedules. They're required to hold these records for certain periods of time. Prior to Symbiont's deployment in the public archives, it was all done through spreadsheets and calendars and manual intervention. And there are many, many thousands of documents that haven't been properly destroyed or weren't properly retained, and therefore the state was out of compliance. So we've now created a solution where you can automate the retention schedule of any of these documents, and when it's stored on a distributed ledger, it will sunset itself. It will also pass ownership from one actor to another. So if a city is required to originate a document and pass it to a county, and the county is required to then pass it on to the state after a certain number of years, this is all done programmatically as smart instruments on our distributed solution. We've now gone into production in other use cases, including that in physical gold, actually gold that is still in the ground called in situ gold. So we launched and support a company called Orbitz that has now digitized 10 existing gold claims, which represents over 5 million ounces of gold, turned them into digital contracts, distributed those contracts to the claim holders. The claim holders have then in turn now used them as collateral sources for loans, as well as now they're becoming traded in an OTC marketplace to receive exposure to gold. We've done this, and we've been able to find these opportunities because we have a world-class board who are deep knowledge in financial instruments and financial marketplaces. The former CEO of the New York Stock Exchange, former commissioner of the SEC, the former CEO of T. Rowe Price. This is the long lineage of financial experts that we have on our team. So most of the time what you'll hear is that people are tired of this hammer known as blockchain or smart contracts trying to find a nail. That this is a great, robust solution, and everybody wants to add a blockchain, but what is the real value application? What is the real use case? Where is it applicable to business in a way that you can demonstrate very clearly the value proposition? So who in here knows Dole Foods? Everybody, right? Who in here is familiar with the fact that Dole Foods went private? They're a publicly traded company, and they've since recently gone private. So in the process of going from public to private, you have to go through this process of determining who the ultimate beneficial owner is of these securities. Now, one of the true value propositions of a decentralized distributed ledger solution is tracking ownership, beneficial ownership, provenance. Who had it before? Who has it now? What are the details about that? In the traditional financial marketplace, that doesn't exist. There is a central trust depository who holds all the information in a single certificate about a public company, and then passes the ownership in the form of contractual rights down through a waterfall chain of participants in the financial markets, from clearinghouses to broker-dealers, and they end up at the owner of the security. But what do they really own? They own a contractual right. And it's very difficult to track who's traded what with whom in real time. So you rely upon a trust authority called the DTC. Now, when Dole decided to go private, they had to go find all the shareholders, and they needed to award them with a certain cash payout as it related to going private. The company calculated that there were 34 million shares in existence. The DTC calculated there were 49 million shares in existence. That's a problem that needs a solution. So what happened? Well, there are certain types of transactions which can duplicate the number of shares and create phantom shares through the process of shorting. This is a process that's done by sophisticated traders all the time. And if I borrow shares and then sell them, I've shorted them in the marketplace, and I have to deliver them back to the person I borrowed them from at some point. I have to cover my short. But when I do that, if you don't properly track it, you will actually duplicate that number. It won't be me borrowing and then using it. It'll actually double the number of shares outstanding, and that's exactly what happened in the Dole instance. Long story short, this went to court. Where did it go? The Court of Chancery in Delaware. Justice Travis Lester said in his when he wrote his decision about this, he specifically said, if these shares were on a distributed ledger, this problem would not have occurred. And that distributed ledger technology is the plunger to clean out the plumbing of Wall Street. So Delaware has gone the next step by changing their corporate law to create a new class of securities called distributed ledger shares. And those distributed ledger shares will track from incorporation to finality the ultimate beneficial owner of any instrument created inside that organization. It will effectively completely solve this Dole problem, allowing it never to happen again because you'll never be out of sync with who the beneficial owners are. So Symbiont has gone into production, and for us, 2017 is the year of production. So we've gone into production in our private equity solution. There are over 20 companies today that utilize our private equity model, which allows for the ability to incorporate, to distribute shares, to fundraise in a compliant fashion, to go through corporate communication, proxy voting, to pay shareholders, all directly from the distributed ledger using smart instruments or smart securities. This is the beginning of what will transpire at the end of the summer when the Delaware legislature votes in the clarification of their Delaware General Corporate Law and provides for a new way and a new type of share. So if you're founding a company or have founded a company and use the state of Delaware, pay attention. By the end of this summer when the legislature leaves, you'll have the opportunity to convert your ownership structure into distributed ledger shares, to receive the cryptographic signature from the state, and then be able to track those shares through finality of your organization on a distributed ledger, never having to worry about reconciliation or consolidating your ownership structures or the ability to communicate or to tally votes or to raise funding. This will all be done in a new and very innovative way, utilizing the Symbiont structure. Another major problem that this is a fantastic solution for is cap table management. Most people here who have participated in any kind of early stage funding probably realize that cap table management is a pain in the butt. And companies now are staying private longer and longer and longer. It used to be about 4 years was the average for a very exciting company to go from origination into going public. Now it's 11 years. Companies like Uber are on their K or L round of financing, managing each series in different ways, trying to keep up with who owns what, how much do they own, when did they purchase it, what are the rules of that particular series versus another. What happens if we go through this transaction? How does it affect all the different series of fundraising in our cap table? What distributed ledger shares do and smart instruments do allow for the organic creation of the cap table as a byproduct to tracking the ultimate beneficial owner. So instead of having to work very hard to keep your cap table in order, this will be done for you in an automatic way. This is live and in production today. So this isn't a dream about what can happen next year or the year after, the year after. This is happening right now, and it's solving real world problems. Companies were so excited to do this, they stepped into this opportunity before Delaware even clarified their laws, because they knew it was coming, and they wanted to get ahead of it and start to solve the real problems that they already have. You can also test, analyze, and then execute business rules. As you move forward in the history of your company, you'll have to make decisions about, what do I do with deal offers? What does it mean to my Series B holders if I take this deal? What happens to my Series C holders? What will it do to my option pool? Will I have an accelerated vest? If I do, does that mean I have enough shares available to issue them? Do I have to go back to the state and authorize more shares so I can issue the shares out of my pool? All these things are major questions and problems that are answered on a daily basis by private companies, by venture-backed companies. These are very difficult things to solve in today, but this future state, and when I say future, I mean next month state, is all available to you now. And it is done in a way where you have complete understanding and a deterministic outcome of the truth. And I think Tim really hit on an important topic here. It's not about trust as much as it is about truth. If we have truth, we can have trust. Sometimes you trust people and they're not telling you the truth. So having this record of the truth and having all these disparate participants be able to come and experience this information at state and know the veracity of that information, know it is the truth, and they can act on it. This is very powerful. And it's a very powerful seed change from the control of information in a central location and the reliance on that information, and acting in a way that is always reactive instead of being proactive. So as it relates to where we're going with this technology, in areas where you can originate the instrument natively to a ledger, programmatically represent all the terms and conditions of that particular instrument, and allow it to transact without any off-ledger custodians in an automated fashion to finality. That's the future. That's where this technology is going. And that's what's being implemented today, both at Symbiont and around in different types of technology solutions. So if you're interested in learning more, the state of Delaware has an extensive website that discusses what they call the Delaware Blockchain Initiative. We're happy at Symbiont to share any more information about what we're doing here, not only in private equities, but in also other areas. What we're finding is that the strong anchor that we have with the state of Delaware is giving a high level of comfort to other actors in this ecosystem to step in. You now see the state of Illinois starting to do something. You see Nevada trying to pass laws. Arizona just passed the House bill that we discussed previously. So in that Venn diagram that Tim showed, and in that center where the regulators are, there's a very big interest from the government regulators in how these things are structured. And if you think about the why and not just the how, and you backtrack to why things happen, you'll find that the actor that you think might be in charge really isn't, and it's someone else. And in fact, most people believe that the SEC is really in control of what happens with the share ownership of companies. But the real regulator of record is the state in which you incorporate. And that changes how you think about the structure and the action and what you do when you found a private company and take it all the way to finality. So I had left time for questions, but since I'm taking them out after this, I can take one now. I think I have another minute or two before I go. No? Perfect. Thank you.